Today we are going to discuss about Life Insurance Corporation of India. Before we're going to discuss about LIC, I would like to give introduction about how insurance business works. They collect premiums from the policyholders. They invest that amount, some percentage amount, in different entities, which is equities, bonds, etc., and they gain money from it, which also supports policyholder in their claims. So it's both win-to-win situation for insurer, which is insurance company, and policyholder who is buying insurance. No one needs an introduction about LIC because we all aware and we are emotionally connected to it. It is formed in 1956. It's not a single entity which has been formed, but it is a merger of 245 different private companies where it was having 27,000 employees and 50 lakh policies during that time. If you see at the time in 1956, there were only 50 lakh policies approximately against 41,000 crores, which is very less. And LIC played monopoly role between 1956 to 2000, which means it enjoyed monopoly status for 44 years. And at present, we have 24 different companies in India which deals life insurance. LIC is a government-backed entity, means if LIC is a default and it will not be able to pay money back to policyholders, government will support and it will pay back the money. This image shows key regulations in insurance sector between 1999 to 2021. In 2000, IRDA setup is formed to regulate insurance industry, and also insurance industry has been privatized, which means 26% of foreign investments can be allowed in an insurance company. Later, it has been increased to 49,000 in 2015, and now it has been increased to 74,000 in 2021. Corporate agents and broker channels introduced in 2022 so that corporates like banks, NBFCs can sell policies in tie-up with any insurance company. I would say agents are major backbone for LIC. As if you see, LIC is still holding 1.3 million agents, which is approximately 55% of insurance company agent network. If you see, the next company with more number of agents is ICICI Prudential, which is having 198,000 agents, and the clear difference between LIC and the second highest company is 6.8 times. This shows the strength of agents supporting LIC and being part of LIC growth. Though it got high distribution network, policy mis-selling complaints is least for LIC, followed by SPA Life, which is major strength, positive for LIC. Mis-selling complaints includes the policyholders who makes complaints on insurance companies on their unfair business practices. When it comes to employees, LIC employed 1 lakh plus employees. This includes 44 employees deputed to foreign entities, which clearly shows LIC is not only present in India, it also present in Singapore, Lanka, Nepal. And the third portion of this slide shows LIC's major holding in different subsidiaries, which is LIC Housing Finance, IDBI Bank, LIC AMC, where it holds major portion of stake. In LIC Housing Finance Limited, it holds 45% of stake, and IDBA, it holds 49% of stake. So these are the investments or subsidiaries for LIC. When compared to global peers, in terms of life insurance premium, LIC is at 5th place, which shows how big LIC is, not only in India but in the world. If you consider market share in India, LIC is still holding 64% of market share in terms of total premium during 2021, and it is slightly reduced to 63.6 in 2022. One thing we need to remember here is the private companies or private organizations came into picture in only 2000. They are just 20 years old. This shows like how the market share has been drastically decreased since 2016 to 2022. If you see, in 2016, LIC were holding 81% of market share, and it has been drastically reduced to 71% in 2022. You can also see the same happen in terms of new business premium, whereas it is drastically decreased from 56% to 43% now. When it comes to product mix, the major portion of products sold by LIC is participating products which within non-linked. And if you compare the other private companies where they hold more share in non-participating policies, what it means to company is participating policies produce very less margin, which is approximately 12 to 15%, whereas non-participating policies gives a more margin, which is approximately more than 80 sometimes. This table shows how the margin has been grown between 16 to 22. If you see the LIC, the growth of LIC since 2016 to 2022 in terms of margins, it is very negligible. So far we discussed about agents bringing business to insurance companies. The other channel exists, whereas even insurance company can tie up with banks or NBFCs to sell their business. In this area, LIC has 70 bancassurance companies where it has tied up with 70 different banks to do their business. The other table shows like trend of number of bancassurance between 2019 to 2021. Though LIC is linked up with 70 different bank assurances, NBFCs, it's only selling 51,000 policies, which is comparatively low. You'll understand this in the next slides. If you see here, for LIC, 93.8% still is coming from agents, and corporate banks brings only 3.1% of business, whereas direct business is only 2.2%. And in terms of policies sold, in the second table you can see 19 million policies has been still sold by agents, whereas only 2 lakh policies sold by corporate agents, and direct policies is 88k, which is very less when compared to other private players where they are more concentrated on corporate bank and direct business channel. We need to concentrate on this direct business channel because direct business will give you more profitability when compared to agents and corporate agents where they have to pay commission. This gives you more idea about how LIC channels has performed across these years. In 2016, individual agents were bringing 68.3% of business to LIC. It has been gradually decreased to 58.2% in financial year 2021. Even LIC realized that they have to concentrate on different channels to improve their productivity and profitability. The direct selling growth is clearly showing the trend. 2016 is only 4.8%, whereas it has been increased to 8.9% in 2022. We discussed about number of employees of LIC, which is approximately 1 lakh plus. The interesting part you need to notice here is revenue generated by each employee for LIC is very less when compared to other private players. You can see the example of LIC and SBI Life here. LIC's revenue per employee being 2,54,000 per year, whereas SBI Life it is 13.86 lakhs per employee. I am not against employees here, but this is the data provided by LIC. When it comes to LIC yields to policyholders, if you see in the life sector, it is underperformed when compared to other insurance companies, which is SBI Life, which is giving 8.6% of yields to policyholders. And we don't need to even consider about linked life fund. It is underperformed by to other life insurance companies. On the other side, if you see non-performing assets of LIC, which is huge for any company, this shows the growth of LIC in terms of premium. LIC is growing 9.3 CAGR. The other players are giving double-digit growth except ICICI Prudential. As I mentioned earlier, life insurance companies invest their premium in different entities. So if you consider the investment portfolio of LIC, the major portion of investment, which is approximately 60%, is with government securities. This shows the top 10 investments of LIC in Indian equities. In Reliance Industries, it has invested 95,000 crores, and in Tata Consulting Services, it invested in 50,000 crores. This picture is clearly showing major portion of LIC investments in equity belongs to blue chip companies. Thank you so much for being with me. Have a nice day.